the New York session 2. It is 9:30 a.m. Eastern, and let's get started off straight away with the Euro USD 4-hour chart flashing up on your screens. Maybe we can just shift it to an hourly first. What we are seeing on the price action or the wave counts is either Euro has first things first, the larger degree wave is up. Even the lower degree impulse wave is complete. We've got the first impulse wave 1, 2, 3, 4, 5 right in front of your screens, followed by a corrective ABC decline around the 3rd of Feb. Remember the gap down opening on Monday morning. So that's a clear bottom, clear indication at 1.0200 that euro has found its bottom. And the only question remains is, have we started unfolding the third wave, or are we going to dig, or are we going to find some more sideways action before the second wave actually completes? I'm keeping both the options open because uh, multi-year patterns do tend to repeat itself, and when we are talking about minor wave 2, it may take some time to develop and unfold itself. But either ways, one thing is common: we if we keep buying on dips with a stop around 1.02, it's going to be good for us. All right. Now prices are actually stalling. The retracement has exceeded by about a few points. I mean, 50 odd points or so. The good thing is that it's stalling right at the resistance turn support zone, right there. So a quite high probability remains for prices to turn towards the larger degree trend from here, and the immediate target is 1.07. It's not actually 1.07, but if you allow me to give me the retracement of for the recent wave counts, well, and that's the lower degree wave 1 of 3, then we have extensions working towards 1.0585 in the near term. Let me bring up the price targets first. There you go. These are the price targets. 1.0579 is the first one. Quite possible that this could be a leading diagonal of the third wave as well. Numerous possibilities are there. Highest possibility is that of a leading diagonal, where I can see we got maybe if you're doing a sub-minute wave 1, 2, 3, 4, and 5, which is absolutely possible. And don't bother, wave 4 is entering the territory of wave 1. That's always the case in the leading diagonal. So if this is a sub-minute wave, I mean, I think we should be good enough. All right, and the target for the sub-minute wave somewhere pointing towards 1.0579. Let's also compare with the Elliott. If that is wave 3, and if we put that's coming across 1.0605, which is just about 20 points away, and that's almost allowed. And if we look at the third wave of Elliott Fibonacci extension, all right, the third wave is much higher. So I don't think it's going to be a 5-wave leading diagonal. Let's remove this for now. One thing more or less is confirmed. The high probability is that If prices turn higher from here, it's the next stop is around 100, not even 100 point, 170, 160 points higher from here. And just to just a humble reminder, just in a few hours, I think 3.5 hours from now, uh, 3 hours and 25 minutes to be precise, we've got the noise coming in with FOMC minutes. If I remember correctly, today being 19th of Feb, Wednesday, we've got FOMC coming out at 2 p.m. Eastern. So hang in there with the longs active. If you're not yet done anything, and if you want to do it partial longs, at least are called for. Remaining around 300, 320, 40 zone is good enough. I kindly place your stop around 1.02, even better to stay stopped at 1.0150. All right, so that's the story in the Euro USD. All right, the dollar index is, of course, exactly the opposite, but it looks like we are in a sub-minute wave 3, sorry, sub-minute wave 4 around 10715, 10713, which is complete, and immediate short-term target is pointing towards 10560. No change there. This is what we have been discussing since past two sessions. In fact, since past two trading days, and it's okay for the market to take a breather with the fundamental announcement like an FOMC event lined up there. But I think we are just about 3.5 hours away, uh, 4.5, 3, yes, close to 4 hours away, and we should be good on the south side towards 10560. Uh, Thereafter, I mean, if you can take partial profits around that mark, it's fine. 10560 is a good support as well, and we can expect some kind of a bullish rally or a pullback once price action meets 10560. Now that five wave movement is not the only thing which can happen. It can also unfold into three waves within the recent boundary, just a just a corrective three wave rally indicating that the third wave is extending, or it can unfold as a three wave rally completing a WXY, and then it can also unfold into five waves completing leading a running flat. So quite a number of possibilities are there, but looking at the daily chart, it somehow convinces me. I mean, sometimes it's just about the experience that counts. If you look at the wave two, that five down followed by three up, three down, and a five wave rally, it just sets in very nicely into it fits the bill actually. So I would fancy that five wave rally. It's only going to give us a wonderful opportunity to go short again at the higher level. All right. So if you book profits around 10560 partial, that would be a good strategy. All right. Okay. Having said that, we can touch base with gold now. It has rallied quite a bit, but the aggressive shorts which we took, we actually took partial profits just around the just around a couple of hours back when it dropped to 33. So one of the aggressive trades that we had taken around the 44, 45 has been booked profits for, And of course, we've got other levels, other trades active from lower levels around 20 and 10. So that still remains active. Now, the only thing we are suggesting for intraday or short-term traders or those who are still looking to enter or open some kind of a trade in gold, that a potential top is in place, but it's not yet definite confirmation. See, there are signs which are there are subtle signs which we are receiving in terms of the RSI bullish diverge or bearish divergence, in terms of gold printing a new high but silver refraining from doing so. So all these are quite subtle to take as a signal of a potential bearish reversal ahead. But with respect to price action, we are still, since we've got a new high now around 47, technically we still don't have a price confirmation. All right. So in that scenario, of course, we've already entered the trade. We're not exiting or we're not taking unwarranted losses out of fear. But any fresh positions, if you are wanting to take, should be taken in a conservative way after the price action only. We are not recommending aggressive shorts to be taken at this price. And we repeat, we are not recommending aggressive shorts to be taken at this price only after the confirmation of the price action. All right, that's why I'm just analyzing the 15 minutes time frame for us. It looks like the first support is now coming around 1925. We need to wait. Conservative traders, please wait at least until 1925 is taken out. So the structure could be something like this. 1925 taken out, and then we we see a pullback back towards the 30 30 35 zone. And not only that, it can continue lower as the third wave, a sideways wave 4, and wave 5 lower. Now that's a 15 minutes time frame, okay? And if we get a wave structure as we have proposed here, aggressive traders, not aggressive traders, but conservative traders might want to look to sell on the first rally. Now that could be termed as the second wave at a sub-minute degree. I mean, it could be the first, second, third, triangle wave, 4 and 5. All right. And a break below 28.75, the Friday lows, would be a certain confirmation that we've got the 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 major support being taken out on the hourly chart. Not only that, if it drops into 5 waves, that would be adding further to our confidence. All right, and then it would give us a major corrective rally, a meaningful corrective rallies rather, and take it. We'll take it from there as well. So if you're holding aggressive shorts already, please kindly remain short with a stop around 29.55 as we suggested earlier. If you're wanting to take fresh shorts with the price confirmation, then this is what we should be doing ideally. Allow prices to break below 29.25, wait for a pullback, sell around the 35 mark, and then carry forward towards the 28.75 Friday lows. All right, that's let's keep it as it is, and let's see how the price action shapes up in the next few hours. And we'll review when we come back in the next session, that is Tokyo London, Tokyo Sydney overlap. All right. Okay, so let it be there. We'll touch base again the next session. Next, we would like to see. Now, this is also a very high potential trade setup, I would say, and and the reason being a wave four has unfolded. A low. Before that, let me give you an idea of someone, those who are joining us fresh. Okay, that's the wave structure. And we've got wave one, wave two, so 3, 4, and 5 of a minute, sorry. And then we got A, B, C, okay, of a minute degree. What we're seeing on the price action thereafter is, let me just draw the trend line quickly. See, the reason why we are doing trend lines and Fibonacci's and all those stuff, those are the basic pillars of analysis. No matter if you're whatever technique you are using, whether it's an Elliott wave or it's a Dow theory or it's any other theory, supply demand is there or price action, many other theories are there. Whichever theory you're following for the wave structure or wave counts, I mean, certain things are not going to change at all, like a trend line, like the Fibonacci ratio, or the trading zones. Those things are never going to change. And in fact, those things are the only ones which help us find out high potential trade setup and then trade with confidence. So if this is wave 3 in the making, that could be wave 1 of 3, 2 of 3, 3 of 3 is still being worked upon. If you allow me to take an extension of the first potential wave, that is pointing towards the 20, 27, 28. All right, that could be the fifth wave here. This is one way to look at, and the other way is to look at the larger degree picture and the larger degree trend targets. Those are pointing towards 2850 and 28 and 1.03 higher thereafter. Let's avoid confusion and let's keep the larger degree counts here. So pound is well poised to reach 2780 and 3200. Now, whether it is going from here or it prints a new high, then comes back to revisit the support zone and then turns again, that remains, let's leave it to the markets. Ideally, if 2800 is taken out, a major resistance will be taken out, and a pullback is quite natural after that. So the strategy could be take at least partial profits off the desk around the 2800 handle, and then allow for a pullback, and then we go long again. All right. So that's the story in pound. Two beautiful stories left for this session are the Bitcoin and Solana. And the Bitcoin story, I want to bring up two ways. One is the larger degree time frame. That's 4 hour chart is flashing up on your screens here. And we have counted this as a triangle. A, B, C, D, and E, uh, neatly testing the trend line without us doing anything at all. And that's something only the markets would do that would do with so precision. It works with such a precise manner sometimes that uh, it really baffles me. Many other traders actually, not only me. Okay, now the action is lying in the right or on the extreme right hand corner. Okay, if you want to see it in a microscopic view, you just move it to the 15 minutes time frame. What do you see, brothers? Do you see a count of five here? One, two, three, four, and five. That is what it is. The first impulse is ready. All right, we bought at a slightly higher price, but nothing to worry about. Ideally, what is going to happen here, what should rather happen here, is three-wave corrective decline back towards 95, 100 or so, and then the next target. Let's try and project what the next target looks like based on the recent boundary. Let's flip it to an hourly. So 90, 98 and 102. That's the minimum target for this particular wave boundary. So 95, if you get around the 95 zone on the long side, or even now, I mean, 1,000 points not going to make much difference. Risk can be actually placed below 93, but would suggest to place around 89, just in case we don't want to get stopped out in case of noise. Otherwise, technically, it would be correct to place below 93 as well. All right, that we've got an impulse wave here. Ideally, prices should not go below the starting point of the impulse. All right. So long 95, 96,000, stop 89. If you choose to place around 93, it's not technically incorrect. It's still okay, and the target short-term targets are 98 and 1,000, 102,000. All right, and finally the Solana dollar, that is also, it was looking good a while back, and it is still looking good, sir. In fact, it's looking even better than Bitcoin in the sense that there could be wave one and two, and then again one of three and two of three. Maybe the third wave is extending. So we we were long again the second time 166. You can still buy 169. It's okay. But the next target, I mean the next rally should be quite fierce and sharp, and it should drag us. It should push higher towards at least 192. In fact, I'm actually targeting previous wave for a one lesser degree. You never know if the third wave is extended. It can take us towards those highs in a flash. All right, the stop loss we place around is 150, but it is okay even if you place around just below 161. It's technically correct. The only thing is be on the safer side or stay away from the noise. I recommend uh, a few points below, that is around 150. All right, so those are the stories as we now come to an end of the New York session. We are still watching the indices. I'm watching a side of the live sessions, and believe it or not, it's only about 1 or 2 days where we will be back into action in the indices. All right, so let's bring the current session to a pause now, and we'll be back again after a few hours to touch base or continue the story during the London, the Tokyo Sydney overlap. And until then, once again, thank you for tuning in and happy trading. Take care and God bless. Goodbye.